Oh, goodness gracious. I mean, today after hours, we're seeing more casualties than the Battle of Changping. Look, you history buffs out there, will, according to sources, we'll see. Are the ancient sources correct? Who knows? But that's the amount of casualties we're seeing right now. And Etsy, another one to fall in line. And frankly, this is one that I think any one of us could see happening. We looked at what we saw last week, and the reaction that came negative from every company, the big companies reporting earnings, the reactions that were negative were because of a weaker guidance. And Etsy is a stock that's really been riding on, they've been walking on sunshine, to be putting it just fair. I mean, it's a fair way to say it. You're walking on sunshine because you're showing growth rates of 100+%. Now, here's the issue. When you're coming up against those comparables next year, it's tough. And it doesn't look as good. So this is a stock that's warranted, frankly, earned last year a very high multiple for its stock. Very high multiple. Now, when things level out more and it's harder to grow that significant, despite them being a great growth opportunity over a 2-year period, investors only care about the 1 year. They care about the current year right now. They don't care about what happened last year. They care about what the number looks like this year, even though they've got short-term memory loss. That's kind of the issue. So they don't know about the Battle of Changping, but they have short-term memory issues, right? Let's take a look. And again, you look year-to-date, the stock was up 17.4%, which is actually relatively high compared to the general market. And up 49% over the last year. Pretty crazy. But what's crazy if you look over really just since March of 2020, the stock's up 422%. That's where you saw this demise incoming, in my opinion. So my guess is it's not going to be that the numbers are bad. It's going to be that we see a slowing growth rate. It's not going to be 100% like it was before. And that's what's going to scare people away. Let's crack into these. EPS line of 68 cents beats by 4 cents. Nothing wrong with that by any means. Nice. Right on target, really. Nothing crazy. Revenue line, here's where we're talking. $528 million, up 23% year over year, which is a significant growth when you're looking over the 2019 numbers. But only a 23% growth compared to last year's significant growth in which they grew 100%, by the way. It's a beat by 3.2 million. There's the issue, right? There's really the majority of the issue there. And the other issue is going to be with guidance, because next quarter is going to be an even tougher quarter for them. That's the thing you got to consider. Gross merchandising sales came in at $3 billion versus consensus of $3.03 billion. Per active buyer was up 22%, which is good because you want to see that. That's how you really grow revenue without necessarily growing, buyers and users. Q3 guidance. This is what we're paying to see. Expected to be 2.9 to 3 billion. Now, if you consider that's less than it was right now. That's less than this quarter, which is representing a 12.5% year-over-year growth. That's the concern. So the issue here is because that looks like a much smaller percentage. I mean, it's a much smaller percentage growth year-over-year than it was last year. That's what ruins this company from earning the multiple that it was at, because the growth rate has slowed. When you're still showing hyper growth rate over 50%, you can really trade the stock wherever it wants to go. There's no really fair metrics for valuation at that point. Things just go bonkers. People just buy it. When you slow down, just because of really freaking tough comparables, if they were able to grow that significantly every single, good grief. Well, what are we talking about here? But there's the issue for you. Revenue expected to be 500 to 525 million, which is, I would say, it shouldn't be a decline quarter over quarter. That's where I might be having a hold up. Consensus was 527. Not necessarily that low under consensus, but it is still a miss. And in that standpoint, when you miss on guidance in this market, you're getting smacked. You're getting smacked around. Let's look at this press release. It's what we got to do, okay? Trailing 12-month GMS per active buyer grew 22%. We saw that. Not bad at all. Etsy Marketplace GMS grew 14.2% year over year. Yeah, I get that. I get that. Net income line came in at $983 million, which isn't that bad, all things considered. And again, this could be an industry that's got quite a good margin on it, frankly. depending on how they decide to operate this business, but there could be a lot of opportunities to boost that margin. Here's in a chart standpoint, a little bit easier to comprehend in that aspect. Year-over-year growth, that's what we like to see. I mean, good grief. When you're looking at a 6 months ending standpoint, still growing 53%. Again, that includes a weaker quarter that you saw as like the December quarter of last year. So a little bit weaker of a quarter because we weren't quite in full pandemic mode where people are buying every single thing online. But net income is what I like to see too. 3 months ending, not necessarily as good, but from a 6 months ending standpoint, up 122%. That's where you need to see growth at this standpoint. Active buyers and sellers both saw significant increases. I like seeing that. For some reason, the 3 months ending and the 6 months ending are the exact same. So someone goofed up a little bit on this. Let's be clear. Investor relations team, let's get your crap together. You can hire me if you'd like to. And I could definitely do a good job for you. So here they'll sell the stock. Nothing I'm too fond of, frankly. We saw guidance. We will look at the balance sheet because it's one thing I love to look at. We get a 6 month comparison. Nice to see it. Total current assets sitting at $2.69 billion compared to $1.89 billion. Growth is in the cash position there. $800 million growth in the cash position. And cash equivalents, so, not too bad. Could be some marketable securities, we don't know. Total assets in general at 3.29 compared to 2.4. Still growth there, right around 900. But again, most of that's due to the current asset line. Liabilities, total current liabilities sitting at 407 compared to 457. So actually a slight decrease there, yet they grew the current asset line much more. But we saw more of an increase in total liabilities in general. 2.75 compared to 1.66. Actually, we saw a decrease in equity over the last 6 months, 530 compared to 740. That would be my concern. Again, this company needs to work on profitability, and they can get there, but I'd like to see it be a little bit better for this balance sheet standpoint. Not quite a very strong balance sheet for a company of this type. I'd like to see an internet-based e-commerce company do a lot more, frankly, in terms of net income, because I think they have a lot better opportunity to really show great margin where you didn't prior. So again, I think margin is a key aspect for this company as it grows. And again, this is a company that's still growing, and you see 14.5% after hours down. It's going to be a rough day, but we'll see what it opens at. Stock still, look, let's put it into perspective. Company's valued at $25 billion market cap prior to this. After this, frankly, it's going to be trading probably around a $22 billion market cap. And if you look over, a full year standpoint, they'll likely this year put up pretty darn close to $2.25 billion in my perspective. It's still trading pretty high, I can't lie to you. Not crazy, though, because it'll be trading around 10 times that value. So the issue, though, is going to be with growth rate, because that growth rate's not necessarily going to speed up quite like it did the year prior. And I think that's going to be what's holding this stock back, because, frankly, Wall Street, they're full of dum-dums, Me want gum-gum, dum-dum. Have you ever heard of that? Ben Stiller, anyone? National Treasure? Yeah, I've heard of it. So, dum-dum wants gum-gum, and that's the thing. That's the Easter Island heads. They are Wall Street right now. They don't know how to say anything. So, they're dumb. And again, P/E ratio, not a metric you usually value these companies at right now, but it's the market we're in, unfortunately. We're talking about Battle of the Bulge. I mean, it's rough. Changping, all of these deadly battles, they're hitting us hard. Yeah, Thermopylae is envious of really the amount of massacres happening tonight. So that's what I got for you. I hope you had a great day. Whether you're the Themistocles or not, Themistocles, great naval emperor, great naval general. Did some great stuff, but that's what I got for you today, and I don't know why I'm talking about this.